Friday. Then they close the rest of Friday night and then Saturday and then open back up at 6 p.m. Now, there's some exceptions. It closes for 15 minutes every day from 4:15 to 4:30. But other than that, it basically trades 24 hours. So think of the benefits there. If the stock and option market is only open from 9:30 to 4, I can only find opportunities within that time frame. With futures, we have almost 24 hours, 6 days a week to find opportunities. Now, another thing that we have to talk about too is that futures are closed on some holidays. Now, futures are a global business. Okay, we can talk about stocks that trade on the American stock exchanges, so they can be subject to the holidays of America, but futures are a global business. So when we have things like President's Day, or how about even Thanksgiving, the Thanksgiving that we celebrate here in America is American Thanksgiving. Do you think in Europe they are celebrating American Thanksgiving? No, they're all at work. So if you ever look, actually on Thanksgiving, the futures are trading typically till the European stock market closes, which is 11:30 a.m. our time. And Frank, his mic's not working today, but he'll tell you that he is always trading on Thanksgiving because there's a lot of times it offers up very good opportunities. But again, President's Day, Martin Luther King Day, days where the market is actually closed in America, the futures are not. So there's always opportunity to. Now, things like Christmas, different story. Futures, because it's more of a global kind of thing, that futures are closed. But it's typically not the case. Okay. Now, how they trade. Like stocks, futures are traded on exchanges. When we had our pig and ham producer, producer scenario, we had a one-on-one. Well, obviously it's developed a lot over the years, and we have exchanges. No longer does a pig farmer have to actually go and knock on the door of a bacon and ham producer. There is an exchange in which these are taking place almost 24 hours a day. There's exchanges all over the world. A couple that you might have heard of: the Chicago Mercantile Exchange, the New York Mercantile Exchange, the Chicago Board of Options Exchange. There's exchanges in Philadelphia, California, Chicago obviously we talked about. There's also exchanges in Shanghai and in Germany and in the UK. So there's exchanges all over the world that are trading futures. So more of the basics. I want to talk a little bit about the difference between stocks and futures. Now, stocks represent ownership in a company, right? If I own a share of Microsoft, I actually own that company, right? I actually own, now mind you, it's a small percentage of the company, but I'm actually an equity owner. I'm an owner of Microsoft. And I own that stock forever until I either A, sell it, or B, the company goes bankrupt. Okay? But otherwise, I can hold that forever. I can pass it on to kids and grandkids, and as long as the company stays in business, we're fine. Now, the difference with futures, futures have a finite lifespan. They expire. If you remember, in our pig and bacon and ham scenario, we had a 60-day contract. It expired after 60 days. So we have an expiration date to futures. Okay? You're also buying a contract. A contract does not give you present ownership. Again, we go back to our bacon and ham and pig farmer scenario. And remember when we had our contract for you to have 30 pigs. Those 30 pigs, were they yours on day one of the contract? No. You didn't get them to the 60th day. Just as in that $5 per pig was not mine until the very last day when that contract expired. Okay, so that's two of the main differences between stocks and futures. Okay, stock options work very similar the same way as futures options contracts. So again, how they trade. Now we're going to talk about the S&P E-mini, which is what the S&P 500 futures are called, the S&P E-mini. They trade in quarter point increments. Now you might be used to stocks. Stocks trade in pennies. So do well, stock options trade a little bit differently. But the S&P E-mini trades in quarter point increments. And each quarter point is worth $12.50. Okay, so 1 point is $50 per contract. So for example, let's say the price of the market was at 1303 and it was going up. What you would see, the way the price movement would work, is it would go from 1303 to 1303 and a quarter. Remember quarter point increments, to 1303.50, to 1303.75, to 1304. And that's how movement works with the S&P E-mini, quarter point increments. Okay, so let's look at an example here. If I go long, or I buy one contract to open a position. Now, by the way, the symbol for the S&P E-mini, if you guys wanted to look at a chart on your platforms, whatever platform you're using, is /ES. So when you see /ES, it's just the symbol for the S&P E-mini, just like AAPL is the symbol for Apple. Okay, so let's say we go long one contract at 1100. Now let's say price rises to 1103 and we sell. What did we just make? Okay, if we bought it at 1100, it went to 1103. So we made a 3-point profit, right? 3 points. We can see that we went from 1100 to 1103. Now remember, if we made 3 points and we make $50 per point, okay, that's $150. So I want to show you an example. I'm looking here at a chart. This is a chart that I believe I did last week. This is a 5-minute chart. So each candle here is 5 minutes. So you can see here our time frame at the bottom. And you can see here this is /ES, which is the symbol for the S&P E-mini futures, that we went from about 1302, a little bit higher, to about 92 in a matter of 2 hours. So how possible, I guess, is it to make 3 points? In 2 hours here, the market fell 10 points. Then you can see over the next 2.5 hours, it went back up another 12 points. And we're going to get into that a little bit later, how we capture points in this market and make money on a daily basis. Okay, another day here, very similar. You see 8 o'clock in the morning, we're trading at 1320. A few hours later, we're at 1298. So we had more than a 20-point swing. Again, can I find 3 points? Often more during those time frames when the market moves that much. I'm going to show you later what happened today. Okay, another example here. These big price swings from 8 to 1030. We went up about 14 points. Then we had a swing down for about almost 20 points. Then another swing up for almost another 20 points, 18 points or so. So the market offers up opportunity, remember, at $50 a point per contract.